2025 long-term capital gains tax calculation examples, educational only, not financial tax or legal advice. I'm going to show you an example one that is taxable, and example two that is tax-free. So below here we can see the 2025 long-term capital gains tax rate chart. Now this is referring to not an IRA or a 401k or a retirement account, but most likely a non-qualified brokerage type of account or a non-qualified security like a stock or ETF or a mutual fund or something similar. Now below here, we have our three different tiers: 0% tax, 15% tax, and 20% tax, depending on that long-term capital gains tax income level. Now, example number one here, you are working and you have a taxable income of $150,000. You also have a $20,000 long-term capital gains tax. You are also a married filing jointly status. As such, using the chart above, you would start in the 15% long-term capital gains tax bracket as your income is already at $150,000. So it's above that $96,700 mark above. As such, your long-term capital gain of $20,000 is taxed at 15%. So your tax just on this long-term capital gains portion is $3,000. Now, in example number two, you are retired and you're no longer working. You are also in a married filing jointly status. You take out from your 401k or your IRA $40,000 that is taxed as ordinary income still. You also have a $40,000 long-term capital gains tax on top of that, as the total is $80,000 and the 0% long-term capital gains tax bracket is less than $96,700, your total tax on that long-term capital gains portion is 0%. So your tax on that $40,000 long-term capital gains, just that alone, is $0. That's why it's so important here when you're doing your investments, when you're doing your financial planning, to take taxes into consideration, because things are taxed differently from your long-term capital gains to your short-term capital gains to your 401k or to your IRA on here. But there are ways that you could minimize the taxes, and there are ways you could be in a tax-free bracket depending on a number of situations and variables. There's also other factors to keep in mind, like your state taxes, your net investment income taxes, and so many other variables. So again, this is just one example of many to be aware of. And again, as always, this is educational only, not financial, tax, or legal advice. Always speak to a trusted advisor. Thank you so much for being here.